Welcome to FinEdge, where we make wealth building simple and accessible. Let's be honest. When you hear investing, you probably think of needing thousands of dollars, right? But here's the reality. You can start building wealth with just $100. Yep, that's less than a night out or a new pair of sneakers. Now imagine this. That small investment could be the start of financial freedom, so you can live the life you dream of. Here's a fact. Every wealthy person you admire started somewhere, and most didn't start with millions. You don't need to be rich to start investing, but you do need to start investing to become rich. So today, we're diving into a step-by-step blueprint on exactly how to invest with only $100. Stick around because, by the end, you'll have a plan to turn that first 100 into something powerful. Ready? Let's go. First things first, let's address the elephant in the room. Risk. Why should you even risk your hard-earned $100? Here's the answer. Doing nothing with it is a risk too. Inflation eats away at your savings, and keeping money in a regular bank account is basically letting it shrink. So, let's make that money work for you instead. But here's a key principle. Diversification. If you're only putting in $100, you want to maximize where and how it's invested. Picture it like building a financial safety net with multiple threads. The stronger and more diverse the threads, the less likely you are to fall through. Now, imagine explaining to your future self why you didn't start with $100. Well, I was too busy buying lattes. Doesn't sound great, does it? So, how exactly should we divide that $100 for maximum growth? Glad you asked, because this next part could be the key to turning that $100 into something far more substantial. Our first strategy? Exchange-traded funds and index funds. You've probably heard the names, but here's the deal. These investments allow you to own small pieces of big companies without needing thousands of dollars. Imagine owning a piece of Amazon or Apple with a few dollars. It's possible with ETFs. The beauty of ETFs is that they're like mini portfolios all in one, spreading your risk across multiple stocks. The best part? Many brokerages allow you to buy fractions of ETFs, so even with $20 or $30, you're already diversifying. Quick question. Who wouldn't want a little piece of Apple in their life? It's way better than an overpriced fruit smoothie, that's for sure. Next up, high-yield savings accounts or money market accounts. Now, I know what you're thinking. Savings accounts? Isn't that boring? But hear me out. These accounts offer interest rates significantly higher than traditional banks. And here's why it matters. If you're starting small, every cent counts. Let's say you put $50 here to keep it safe but growing. It's not flashy, but it adds a layer of security and liquidity, so you can access your money if a fantastic investment opportunity comes up later. But speaking of opportunities, what if you want to be a little more adventurous with that $100? Let's talk fractional shares. With just a few dollars, you can own a small portion of popular stocks, companies like Tesla, Netflix, or even Google. Yes, you could be a shareholder in the companies you interact with daily. Crazy, right? Many platforms like Robinhood and Fidelity allow you to invest as little as $1 in these big-name stocks. Imagine being able to say, yeah, I own a piece of Tesla at your next get-together. Flex-worthy? Absolutely. And before you roll your eyes, consider this. If you had invested $100 in Tesla 5 years ago, today you'd be sitting on over $700. No joke. Now, what if I told you there's a final trick for your $100 that could be the game changer? Hang tight. This last part could completely shift your investment approach. Our final piece of the puzzle? Robo-advisors. For those who don't have time or knowledge to pick stocks, robo-advisors are like your personal finance assistant. Platforms like Betterment and Wealthfront allow you to invest with as little as $10, providing a diversified portfolio tailored to your goals and risk tolerance. These advisors adjust your portfolio automatically based on market trends, ensuring your money is managed professionally without you having to lift a finger. And here's a question. How many times have you wished someone would just manage everything for you? Exactly. Robo-advisors do just that, but for your investments. By now, you're probably wondering, what's next? How do I get started and turn these steps into action? To wrap it up, you've got options. ETFs for growth, high-interest savings for safety, fractional shares for bragging rights, and robo-advisors for hands-off investing. That $100 isn't just a small investment, it's the beginning of a wealth-building journey. But here's the secret. The journey only starts when you take action. Remember, the best time to invest was yesterday, but the second best time is today. If you're ready to dive deeper, check out our video on how to build your first investment portfolio. It's the perfect next step if you're serious about growing your wealth. Hit that link and let's turn that $100 into the foundation of a financially free future. Thanks for watching, FinEdge.